Fed officials ditch quantitative easing. Is the economy ready to roar? In today's cover story, what's lurking behind Facebook's earnings day flop? Plus, developers who are trying to reinvent the mall. And get ready, our film critic says the year's biggest film is almost here. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, I'm Angela Miles. It's Thursday, October 30th. In today's First Look, stocks sell off as the Fed calls it quits on QE. The knee-jerk reaction was much larger on the announcement. In the end, the Dow fell 32 points, the Nasdaq 15 and S&P 3. Gold took an $18 hit and oil inched up just 68 cents. Orbital shares are down to earth. The stock crashed 16% yesterday after an explosion destroyed an orbital rocket carrying supplies to the International Space Station just seconds into that mission. Future launches could be delayed for a year. And faulty Takata airbag replacements could take until February to get into cars as the company rushes to keep up with the demand. NHTSA officials will meet with Takata executives today. Trader Todd Horwitz of Average Joe Options joins us now. And what do you suspect will be the fallout in the market today as the Fed ends its stimulus program? Let's start with the stock market.
When you look at the overall market, yesterday's action, you can call it what you want. It was more bullish. It was really a little profit taking. The Fed came in, made their announcement, said we're done, and the market sold off a little bit. Fed's done, but we all know one thing. The Fed is still waiting on the sidelines should there be a problem. What
do you suspect will be the fallout, though, in the bond market as well as the dollar? And gold and oil remain tame. They're just not inflationary at this point.
If you take a look at the bond market, first of all, you can still see that they're trying to keep the long end of the curve flat. They're pushing up the short end of the curve, which means that we could see a little bit of interest rate trouble here. But you've got Hawks and Fisher and Placer. The rest of the commodity space has been weak. And I mean, listen, we're producing so much oil here, plus around the globe, so that's keeping oil prices down. And gold, if you look at it as what it really is, in a true commodity, not a hedge against anything, it's in just a period of stuck between 1,200 and 1,250. It made a new low at 1,181 about 2 weeks ago, rallied up to 1,250, and we just range bound we are until it decides it's time to move again.
Lots of range and no change. Thank you.
Thank you.
Chuck Coppola is here now with more details on what the Fed said. Good morning, Chuck.
Good morning, Angie. The end of quantitative easing marks a new phase for the economy as the central bank takes the training wheels off the economic recovery. The Fed says it is confident that the U.S. can continue growth in the face of a global slowdown. The Fed cites substantial improvement in the outlook for the labor market and sufficient underlying strength in the broader economy. While the bond buying program will end at the end of the month, Fed Chair Janet Yellen says rates will stay low for considerable time.
Questions are being raised over whether hedge funds and high-frequency traders have a trading edge. The Wall Street Journal points to studies showing a lag time between when the public has access to information from the SEC and when hedge funds and high-frequency traders get that same news. The studies focused on the SEC system of posting earnings news and other documents. The SEC says it's reviewing the study.
In today's cover story, Facebook's third quarter revenue was up 59% from a year ago to $3.2 billion. Most of that from advertising, and two-thirds of which comes from ads on mobile devices. So why did the stock tank immediately after the third quarter earnings call? Included in its third quarter earnings call, Facebook had its own version of Apple's "there is one more thing" moment. This one caused investor angst. Instead of a new product rollout, as with Apple, Facebook CEO Mark Zuckerberg and CFO David Wehner warned of a spike in spending next year and scaled back expectations for the fourth quarter of this year.
He tanked the stock with the outlook. So I actually don't recall seeing a CEO intentionally tank their stock like that.
But for all the concern that Facebook isn't as cool as it once was, the social media site still makes an awful lot of money. Net income for the quarter was $806 million. That's up 90% from a year ago. And its profit of $1.15 billion boosted each share 43 cents, an increase of 73% and exceeded Wall Street's expectations.
Bottom line, it's a buy as it gets closer to 70. The risk reward is in its favor. 90 is the upside target here from the sell-off that we saw earlier this year from March to April. That also targets 90, and the sideways action from 70 to 80 that we've seen since July targets 90. So we've got upside potential, another 20% above.
Facebook is the world's largest social network with 1.35 billion users. Advertisers pay for access to all those eyes, but what's ahead worries investors. Facebook's top management said expenses would rise 55 to 75%, a lot of it directed toward boosting the user base of WhatsApp, Facebook's recently acquired messaging app, and Oculus, makers of a virtual reality headset. And revenue growth for the fourth quarter would be between 40% and 47%. That's a long way from the third quarter's 59%. Tech industry analyst Rob Enderle says it all looks very risky.
The end result is they're expecting those expenditures to eventually result in increased revenues, but well beyond the quarters or years in which the expenditures are made. And typically when you see a pattern like this, you're talking about a company that's going to rapidly drop into significant trouble, if not cash flow problems.
Facebook finished the day at 75.86, down a little more than 6%. It's been an up and down month, but generally the stock's been on an upswing since May.
Plenty more is happening in the tech sector. A bombshell report surfaced after the close that two key managers plan to fly out the door at Twitter. CNBC reports Jeremy Gordon, vice president of engineering, along with Adam Kinney, the head of the analytics group, are exiting. It's been a shaky week for Twitter stock. Shares dropped sharply Tuesday following earnings, then another 1.5% after the bell last night. On the plus side, IBM is locking down a partnership with the social media site to predict tweet trends.
Hewlett-Packard is sprouting up in 3D. The company has released Sprout, a computer, projector, and scanner all in one. Users may scan images of multi-dimensional products directly into their computers. The PC will not use a mouse and instead uses a touchscreen. The device costs $1,899 and launches next month.
And this is exciting. Google X is developing a pill to search for cancer. The head of the Google X team tells the Wall Street Journal the pill contains tiny particles able to detect cancer or other fatal diseases when swallowed. The pill, however, still needs about 5 more years of research.
Mobile Pay is just picking up steam, but already there are reports of a security breach. Current.C is a mobile payment system that Walmart has tapped to compete with Apple Pay. However, Current.C has revealed that unauthorized third parties stole email addresses of its pilot program participants. However, the company said its mobile app was not affected.
In the latest recall roundup, multiple flaws are cited in a global recall of 500,000 Chrysler vehicles. Jeep and Dodge SUVs are being recalled due to potential stability control failure and possible overheating of diesel fuel heaters. Chrysler says no accidents have been reported. The models affected include the 2014 Dodge Durango and Jeep Grand Cherokee SUVs and 2010 through 2014 Ram pickups along with chassis cabs.
Fiat Chrysler plans to spin off Ferrari into its own publicly traded company. The Italian carmaker could list shares in New York possibly by the end of next year. The spin-off is subject to regulatory approval. Recently, Fiat Chrysler listed shares on the New York Stock Exchange after shareholders approved a merger between the two. Fiat Chrysler's stock shot up 11% on the news yesterday.
Investors are shelling out money like crazy for the IPO of a pipeline company. Shares of Shell Midstream Partners gushed 45% higher in its debut after pricing in well above its expected range. The company was created by Royal Dutch Shell. Boot Barn stomps onto the market today, trading under the ticker symbol BOOT. The retailer sells work boots and Western wear. Shares are expected to saddle up in a price range of $14 to $16.
SodaStream is moving a controversial factory out of the West Bank. In its earnings report, the Israeli company says it will move one of its factories from an area occupied by Israel but claimed by Palestinians sometime next year. Pro-Palestinian activists say the factory's location violates international law and have called for an international boycott of the at-home seltzer company. SodaStream is reportedly receiving $20 million from the Israeli government for the move and says the relocation is for purely commercial reasons. Its stock fell 2% in trading yesterday after it reported disappointing earnings.
In the U.S., Chipotle employees are suing the burrito chain over wages. Workers accuse the fast food chain of routinely requiring them to put in extra hours but failing to pay the overtime. The lawsuit also says the restaurant's timekeeping system automatically punches them out even when they are still on the job. The suits were filed in Colorado and Minnesota. A Chipotle spokesman says the restaurant chain abides by all labor laws.
Clorox is being sued. Midwest grocery store chain Woodman's accuses Clorox of price discrimination. The chain alleges that Clorox only sells large packs of its cleaning products to warehouse clubs such as Costco and Sam's Club. It says by doing this, Clorox makes it harder for Woodman's to compete with those chains. Clorox says the lawsuit is without merit and adds that it will stand by its policy.
In market-moving earnings news, Visa beat the street. The credit card company is also authorizing a new $5 billion stock buyback. Shares rallied 4% in the after-hours session. Kraft fell shy of expectations, but sales were up for cheese and meats. Kraft stock fell about 2% last night, and Goodyear Tire rolled out a better-than-expected forecast. Shares charged up 5% during the regular trading session.
Ahead of earnings today from Cigna and Cardinal Health, insurer WellPoint reports an earnings boost. The stock rallied 2% yesterday. WellPoint says it's added customers due to the Affordable Care Act requirements. The company is hiking now its full-year earnings outlook. Millions of Americans have been buying and applying for health insurance coverage. It's also at a lower cost to insurance companies than initially anticipated.
Checking the economic calendar for today, it's initial and continuing claims, the GDP advance number for the third quarter and chain deflator, as well as natural gas inventories. On the earnings calendar, Avon, Expedia, Kellogg, GoPro, LinkedIn, MasterCard, Newmont Mining, Groupon, Starbucks, and YRC worldwide. Still to come, the countdown begins for one of the year's most anticipated films. Plus, mall developers try to entice consumers to go offline with their shopping habits. And after the break, the candy company that could make a killing this Halloween.
Higher dairy prices are eating into Hershey's margins, but the candy company is scaring up big demand ahead of Halloween. Hershey is set to gain market share by more than 4% due to the better-than-expected seasonal orders. However, Wall Street is fearfully focused on the candy maker's cuts to its outlook for the rest of 2014. Shares fell 1.5% yesterday.
Going into the critical Christmas season, Radio Shack is reaching out to a turnaround pro. The electronics retailer is bringing in Harry Wilson, a former advisor from the Treasury Department who helped orchestrate the restructuring of GM and Chrysler during the financial crisis. Radio Shack warned last month it's on the brink of bankruptcy. The stock has struggled to trade above $1. Bill Mahler shops for reasons now to visit the mall. Bill.
In the expanding world of online shopping, the question might be asked, do malls still matter? Online shopping, sure, it's coming on strong, but you know, malls are kind of reinventing themselves to be relevant to a connected world. The retail development company Taubman has found a way to make a business case for malls by adopting some of the things that make internet shopping so attractive. William Taubman is the chief operating officer of the company, which just opened one of two malls that have only opened in the past 2 years in this country. Bill, it's in Sarasota, Florida, all 73 acres of it. Are you trying to adopt some of the technology elements, though, that a lot of younger people are comfortable with and put it into a mall
setting? Yeah, sure.
Obviously,
when you build new, you have the capability of putting in all the latest, technology. We have full Wi-Fi throughout the system. We have a high-speed network we've put in. Very soon, you'll be able to download an app on the mall, and it'll be able to tell you all kinds of things about where you are and what's available. We'll be able to send messaging to you with your permission, of course, explaining what's on special, what's new, where you've parked, and all the other conveniences that geolocation allows us to do.
Is there any concern about the Wi-Fi? You know, a lot of people say you shouldn't go on public Wi-Fi systems. Have you built in any security measures there to protect privacy?
Obviously, we have put in quite a bit of security in order to protect both our customers as well as the tenants that are using our high-speed networks for all of their payment systems. But nothing's perfect, of course, but that's true. We've seen with many different retailers and many different venues, but we'll do the best we can in order to protect the information, and we feel that we've put in all the best systems to make it as secure as possible.
And the newest payment systems, for example, Apple Pay, that will be integrated as well?
Well, that will need to be integrated within the stores, but because we're providing such a great high-speed network to the stores, it should allow all of those systems to work much more efficiently in this setting than they would in an older setting. The older settings can be retrofitted. We've retrofitted all of our existing malls or in the process of it in order to ensure they have high-speed networks, but you always have an opportunity when you're designing from scratch, to do things exactly as you'd like as if you were starting from the beginning.
Bill Taubman, thank you so much.
Thank you, Bill.
Coming up, a trader checks the charts on a travel stock that could be ready to take off today. And after the break, the film that our critic says is going to be the biggest blockbuster of the year. Stay with us. Wall Streeters are keeping an eye on Hollywood. Our movie guy is here with his view of market-moving events. Eric, great to have you here. And DreamWorks came out with earnings that were better than expected. Shares rallied 5% on the news. What do you think about this stock?
Well, remember how everyone was panicking after How to Train Your Dragon 2 came out, that the grosses in America were not as great? As soon as the overseas grosses came in, it took a little longer for them to produce, but we're over $600 million at the box office for that movie, so that was a very good success for them.
Another chatter issue that's going on here is Jack Ma, the founder of Alibaba, is reportedly in talks to finance films made by Sony. He likes the movies.
Well, there's no shame in liking the movies. You can't really like the grosses that Sony has been putting forth this year. They're looking to probably finish at the bottom of the box office along with Warner Brothers in terms of sheer profit.
So Sony needs Ma
They
more
could
than
use some
Ma
cash.
needs
Yes,
Sony.
that's right.
Taking a look at the box office action over the weekend, you say no great shakes here. Ouija coming in at #1, John Wick 2, Fury 3, Gone Girl 4, and 5, The Book of Life. So let's get down to what's happening this weekend. Some scary films are coming out this weekend. Before I Go to Sleep, and that's with Nicole Kidman.
Nicole Kidman and Colin Firth was going to go limited. Now they're going wide, so not a lot of faith there.
Mr. Darcy, though, is in it. So come on. Nightcrawler, Saw 10th Anniversary, and Citizen 4, which is the Snowden film. It's
the
a
Edward
documentary.
Snowden documentary, which is a must-see for anyone who's interested in having the debate about this case.
And you like the Nightcrawler.
Nightcrawler, I think, is a terrific film, and it really could use some box office, could really use a little bit of edge, and it's really going to compete in the Oscar race this year because Jake Gyllenhaal is terrific in it.
To get ready for the box office this holiday season, Eric has brought along his top 10 wish list. #1 on your list, The Hunger Games Mockingjay Part 1.
Yeah, tickets are already on sale through Fandango for this thing. It's going to be, with all due respect to Guardians of the Galaxy, this is going to be the #1 film of the year box office in the U.S.
Interstellar, another one of your favorites.
My most anticipated film of the year. Christopher Nolan's one of my favorite directors working today. It opens next week. We'll talk more about it then.
Another edition of The Hobbit, and The Penguins of Madagascar.
A DreamWorks film, because they should have finished off the year pretty well.
Into the Woods.
Disney musical.
Big Hero 6.
Disney Marvel co-production.
Night at the Museum, again.
Yeah, another sequel.
Exodus, Gods and Kings.
Sort of the big sort of mystery, is it going to be the Noah controversy, or is it going to do better than Noah? It's certainly got the Christmas audience now. A very interesting film.
Dumb and Dumber 2, and we did not misspell this.
No, we didn't.
That's the correct spelling. And Horrible Bosses, too.
Yes, I think they're going to the Hollywood's going to be looking at a very good, very profitable holiday season. A lot of big films on the film. I think all of the films on the list are going to make over $100 million.
Well, thank you for getting us ready, Eric. Good to have you here. Still ahead, why traders think trouble may be brewing at Starbucks. What to watch in S-Bucks earnings out today. That's next in Chart Talk. This morning, we are waking up to smell the coffee with Matt Kavanaugh, CMC Trading, who's here to talk about Starbucks. Good morning, Matt.
Good morning.
I'm sensing traders are wanting some caffeinated moves from the stock, but it just hasn't been happening, Matt.
Yeah, and I think that's a function of the stock being pretty fairly priced. So earnings, not a lot is expected. People expect Starbucks to do well, expect them to have good same-store sales growth. But I think the big key is going to be the commodity costs, so everyone will be watching that and see what they say.
So the stock pretty much valued where it is right now?
Yeah, I think so. I think it's fairly priced. It's a great company, but I don't think you add to it here. You only add to it on weakness.
All right, moving on to Expedia. Now, this stock tends to be a trader-happy stock. Traders love the way it moves off of earnings, and once again, the options market is predicting a major move is possible. What's your plan on Expedia?
Well, I think that there's a possibility to be a pretty large move on Expedia, too. And the reason I think so is because the stock has really rallied a long way. It's up about 60% year over year. Analysts are looking for a plus 21% compared to last year for their earnings. The stock's sitting right at a major resistance at the 80 level. And people generally think the travel industry is pretty healthy. So I think there's a lot of positives. And if anything kind of fails here, Expedia could be right for a big move, I think, to the downside.
Good to see you. Thank you for your help, Matt.
Thank you.
It's time for us to fly out of here for today. We will be back tomorrow with Traders Unplugged. The guys get wild over who deserves credit for the economic recovery. Don't miss it. From all of us at First Business, thank you for watching and have a great Thursday.